So, Frank, we do this every Monday. We do our breakdown on the COT data and what's been changed. But this week is different because this week is probably one of the most interesting COT reports that we've had in a while. So let's jump right into it. Walk us through what you saw COT wise that really caught your attention. I know you took some trades right at the end of the week last week. So what's your thoughts? What's your reaction to the COT?
Yeah, so what this is pointing to right now is some heavy bearish, or I would say risk off instead of bearish. Risk off sentiment overall. They're buying, the dollar like crazy. Um,
Mm-hmm.
the net long positions have increased by a substantial amount. They're selling a lot of things, but seeing dollar, Swiss, yen, all in that buy zone, and then scrolling down and seeing the indices, um,
Mm-hmm.
even some metals in that sell zone is pretty alarming to me. And it's not just that they're slightly bearish or slightly bullish. The dollar saw an incredible increase for like what we've seen so far. Usually we'd expect like somewhere between 0 and 2 to 3% on either side, but seeing a 16% change in the net long positions is pretty alarming for, I would say, the COT side. So yeah, with that, I was looking at USD Swiss pairs.
Mm-hmm.
I shorted gold just because of yields and all that. I know their gold was positive this week, but gold's actually working out. I shorted Kiwi Swiss, and the Kiwis actually heavily sold 12% to the short side. So
Mm-hmm.
Did you know that you can watch Trader Nick live stream every morning, Monday through Friday, with guests from all around the world? Each morning, right here on the A1 Trading YouTube channel, we put on a live show where Trader Nick, along with some very special guests, go over their charts and ideas for every kind of asset. We do a live reaction to news drops and do analysis immediately following. You never know what's going to happen during one of our streams. So come be a part of the live stream community. You can find our live streaming schedule on the A1 Trading Twitter account each week so you never miss a news event.
got stopped out of that, but looking to re-enter because I'm just not really buying this rally right now.
Sure.
This is the S&P, but here's the Kiwi Swiss. So it broke this pretty strong resistance level. I mean, it's gonna have to close above it and have some confirmation before I feel like maybe it could keep running higher. But just seeing what smart money's doing and how risk off everything is, I think I'm gonna keep looking for shorts on this pair. And in the long run, it's just a downtrend too. So
Yeah.
not bullish on the indices, not bullish gold. Just gonna look
Well,
for.
Frank, what I think is interesting too, as you mentioned with the COT data, I'll show you guys this again. So what's interesting to me about the COT report this week is that sometimes we get kind of like a mixed COT report. Like sometimes you get like some risk on, sometimes you get some risk off at the same time. This week, it seems like a pretty much a perfect risk off report, meaning that institutional money seemed to heavily move out of risky assets and move into safe haven assets. So what you can see is, what did they sell? They sold the Dow, they sold the S&P 500, the Australian dollar, the Canadian dollar, the pound, the Nasdaq, Bitcoin. All of these things are considered to be more risky assets. And then what did they buy this past week? They bought the dollar, they bought the Swiss franc, they bought gold, they bought the yen. These things are, generally speaking, more risk off assets. So it seems like there was a flood to safety last week, and it seems to be carrying on as we get going into this trading week already. So my bias here, Frank, this week would just be, generally speaking, looking more for risk off plays until further notice. Same with you. I'm not looking to buy the indices when they're tanking like this. I think that could be
Yeah.
a falling knife. That could be a while. So yeah.
So the only thing I could think of though is this report is from Tuesday of last week. Even though we get it on Friday, it comes in at Tuesday, or it's the activity up until that Tuesday. And that was before the rate decision. So I know they were getting heavily bullish on dollar and gold just to avoid, sort of the interest rate hike scare, if there was one. But they decided to hold rates again, so it's hard to tell. Maybe they had these heavy positions going into that decision, and then they decided to sort of ease off that. Just we'll know next Friday. But from what I see in this report was just such a wild swing in sentiment that I feel like it's unlikely that they're gonna switch so quickly. Yeah, just watching the risk off pairs, probably gonna look for longs on the USD. I'm gonna get back long Swiss probably, and yeah, we'll go from there.
I'm worried about the USD and how fast it is currently moving. I saw that you were like, oh, I want to come back down to some kind of support. Yeah, I agree with you on that one, but look at how much it has been growing ever since July. It's up 8%, and then by the beginning of the year is already up 17%. Oh, sorry, a bit less than that, but it's a lot. So I'm like, is Bank of Japan gonna smack us with an intervention? That's what I'm worried about.
Yeah, that's fair. And I think it's one of those things too, Ivan. I guess to push back on the idea there too, that is this thing overbought? You have to also think about, in terms of yields right now, the same question happens there. Is the 2-year yield too high? And I think that one of the major pressures on this 2-year yield, and why I think that it actually could continue to trend higher, is, economic data out of the United States is still relatively strong. And the Fed has been saying for quite some time, hey, we're going to keep interest rates high for longer. And a lot of the market has ignored that, thinking that, no, you're going to have to cut rates. And Ivan, myself included, I thought, a lot of the trend out there was thinking that, interest rates were going to kind of steady Eddie, and then they would be kind of rolling back down next year. And now that's kind of been questioned pretty hard by the markets. And so there is this pressure of, the economy still looks pretty strong, and the Fed has no plans to back down, at least from what they're saying. And the scary part is that the Fed recently has a really good track record of sticking to what they're saying they're going to do. Several times the market has called their bluff, and then it ended up not being a bluff. So it's an interesting kind of time in the markets. And I wonder where you're at with the dollar relative to this. Maybe not just specific to dollar yen, but what do you think is, for me, I'm kind of back to my dollar bullish case until something changes, because right now you have central banks last week were super dovish compared to the Fed. The Bank of England came out and said, hey, basically we see inflationary pressures subsiding. It was like a dovish hold, whereas you had the hawkish hold from the Fed, which was like this, hey, we're not afraid to raise rates again. So two different narratives, and perhaps some divergence in the currency world, which might create some great trends. What do you think?
I'm afraid, because somebody asked me, do euro dollar? This is basically the same, I would argue. Yeah, it is a dollar bullish scenario now. It is risk off. It is a very strong euro dollar downtrend, or dollar strength trend. When is it going to end? When the market figures out, well, this is not going to last forever, is it? So it will be tossed around when the expectations for the next CPI is going to come out. CPI comes around 10th of the next month. So that's the next point of. And that's the next point of, is dollar bullshit going to continue? And it's probably going to continue all the way until then. And for those who has sold off euro dollar, I've saw see somebody. I'm not in that trade. I'm not planning to be in that trade either. I'm just waiting for the whipsaw both ways, and I will be out. So if I try to sell now, I will lose money guaranteed. So yeah, I see the dollar bullishness, but I haven't done anything about it.
Fair enough. I mean, yeah, I mean, I kind of am in the same boat. I don't have any dollar crosses that I'm trading. I have been holding on to an oil trade. The indices have been really, really bearish, and I don't really short them too often. There's just trades that I think are a little bit easier than trying to short indices. You know, maybe oil bullishness, maybe dollar bullishness, those sorts of things. I'm a little bit more interested in. However, for people who are watching the indices, you know, they just look terrible in my opinion. I mean, we've broken so many levels of support. Buyers just are nowhere to be found. And until we start seeing signs of life on the indices side, that one is probably just, for me, no interest. Now, I mentioned a pair that I'd love to get your thoughts on. You mentioned that dollar bullishness, you kind of are in the same camp in terms of looks like dollar bullishness is likely to continue. One interesting currency pair right now to me is the pound dollar. I mentioned this briefly a second ago, and in case some of you guys missed it last week, the Bank of England basically cited that they see like some slowdown in the economy, and they also think that inflationary pressures are going to continue to subside in the UK. And so they mentioned, instead of raising rates, which is what the market thought they were going to do, the Bank of England decided to hold rates. And this is a very different narrative to what the Fed has said, which is basically maybe more rates higher. So the reason I bring this up again and why it's so important to me is because when you take a look at the divergence between one central bank, which is looking incredibly hawkish, and you look at another central bank that is looking possibly even on the dovish side of things, those divergences in the currency world create some of the monster trends that we saw, for example, in 2022 and in the first, several months in 2023. So I think that there is this case where it's possible, as much as this pound dollar trend looks like it is already kind of made its move, it very well may continue. Now, does that mean I think it's a sell down here? No, I don't think so. I think pullbacks, though, could be really interesting on the pound. So Ivan, can you do a markup on the pound dollar for us and tell me what you think about it?
Oh God. No. The thing is that I agree with you, and then the squeaky says, but it was 5 votes to keep the same and 4 votes to increase. It almost increased. Yeah, I just want to say that if you look at CPI is actually falling. It is 5.7 or something. It was 11. Right. So inflation UK has come down. And I think it was even appropriate to just see and wait, because now it's dropping like a stone. Anywho, when it comes to British pound US dollar, I would argue that a deeper retracement is kind of what I should hope for and expect. Because if I take these small ones, at any given point, these small ones are just, in my calculation, it's like a bottom. It's a potential bottom, and it goes a bit further until the big move comes along. So if I were to do anything here whatsoever, I needed to come back up to 123.50. Until then, I just want to stay away, because sometimes the market can do that, and when it does, then you should be prepared. And if it just continues what it does now, I would say that it's actually struggling to go lower, even though it does. But this spring back up again is quite fast.
Yeah, no, I think it's an interesting, when you get these trends, a lot of times people start feeling a little bit of FOMO. They're like, this thing is just, every single day I look at it, it's down. And people who are long are getting, stopped out. People who are wanting to short it are like, every day I miss this trend. So I definitely agree with you. I think that the move here is justified, but waiting for a pullback to get back involved in a trend like pound dollar, it's one that I really like. It has a lot of correlation right now to what the indices are doing, which I kind of like. If you think that there is that potential bearish continuation and risk on assets, the pound dollar to me seems like one of the more obvious trades out there right now. But because it's so obvious, that's why, guys, the trend is already trended, right? When you think about obvious trends, the most obvious ones are usually the ones that are moving just in a straight shot, because the market's like, oh wow, that makes a lot of sense. So what Ivan and I are kind of pointing towards is like, if you want to be part of the obvious trends, you still have to wait for the pullbacks, because if you just sell here, sure, it might keep going lower, but what you're going to start doing is you're going to start building a habit where it's like you sell and you have terrible risk to reward. Because where do you put a stop loss on this if you're watching the 4-hour chart? You know, do you put a stop way up here and hold on to a huge loss if it goes against you, right? You have to be very careful with. That's why waiting for the pullback can be so key. To not just taking the right trades, but also taking the right trades at the right time to kind of reduce your drawdown potential.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.